This company had an IPO in July 2020 at a price band of Rs 425, and the IPO got a bumper response. It got subscribed around 80 times, and the share was listed at 58% premium on the listing day, giving a stellar return to its investor. Since then, the share has jumped to current levels of Rs 1500, giving more than 100% return from the listing price. All this within 1 year of listing. I am talking about none other than Rossari Biotech. Chemical sector in India is on its dream run. After the shutdown of factories in China on account of environmental concern and global companies looking for alternatives to China, India has emerged as a great alternative for chemicals. China Plus One theme is not just a short-term trend that would fade away, but a potential long-term business opportunity for Indian chemical companies that can result in huge growth in these chemical companies in the next 5 to 10 years. Even the Indian government has a strong focus on manufacturing sector with Atmanirbhar Bharat initiative that would immensely benefit the chemical sector in India. On top of that, chemical companies working on sustainable growth without harming the environment would certainly have a very bright growth prospects. And that's where I want to cover one such company in specialty chemical sector, that is Rossari Biotech. Hello friends, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. Welcome to the 38th episode on stock fundamental analysis. It's been a while since I have posted a video on fundamental analysis. One of the reasons is that the majority of high quality growth stocks are trading at higher valuation. And another major reason is that in spite of mentioning that my stock fundamental analysis videos are for educational purpose, many people end up blindly investing in the stocks without any knowledge. And when there's a slight correction, they panic. Hence, I have reduced the frequency of these videos. Although I am consistently creating such videos in my weekly video where I explain my investment strategy and key events in the market along with stock fundamental analysis. But that is only for serious long-term investors who also do their own study before investing and do not panic with short-term corrections. So in this video, we'll look into the business of Rossari Biotech, its promoters, key strength, future growth, competitors and key risk, and then financials and valuation. Finally, we'll decide if Rossari Biotech is fundamentally strong or not. Alright, let's get started. Incorporated in 1997, Rossari Biotech is a leading specialty chemical manufacturer in India. It started its journey with textile chemicals, and after over 2 decades, Rossari Biotech has 3,500 plus products serving multiple industries across divisions. These products are designed around 4 pillars of chemistry, namely enzymes, silicons, acrylic and surfactant. Today, Rossari Biotech operates in 3 categories. First category is home, personal care and performance chemical. Second category is textile specialty chemical, and third category is animal health and nutritional division. If you look at the revenue breakup by division, Rossari Biotech generated a total revenue of Rs 709 crore in FY21. Out of this, home, personal care and performance chemical contributed 56.24%, textile specialty chemical contributed 35.54% and animal health and nutritional division contributed 8.22%. If you look at the end application of Rossari Biotech products, its home, personal care and performance chemical find usage in home care products, personal care, ink, paint and coating, pulp and paper, ceramics and tiles, water treatment, food and beverage and so on. Company has 500 plus products in this category with 100 plus customers and 40 plus distributors. Its textile specialty chemical find application in textile industry, yarn and thread processing, textile coloring, fiber manufacturing and so on. Company has 1900 plus products in this category with 500 plus customers and 150 plus distributors. Its animal health and nutritional chemical find usage in your poultry feed additive and pet care products like your shampoo for dog, cat, horses, then your dog food, etc. Company has got 2 manufacturing facilities at Silvassa and Dahej with total production capacity of 252,500 metric ton per annum. Their manufacturing plants are zero liquid discharge facility that minimize carbon footprint and has got 2 R&D facility at Silvassa and IIT Bombay. Company has 1000 plus customers across the globe. Rossari Biotech co-founders are Mr. Edward Walter Menezes and Mr. Sunil Srinivasan Chari. Mr. Edward Menezes is the executive chairman and co-founder of the company. Mr. Sunil Srinivasan Chari is the managing director of the company. Both the co-founders have a total of more than 50 years of experience in chemical business. Overall, on the company, its business and its leadership, I would rate it 10 on 10. If you look at the key strength of the company, its first strength is sustainable development. Sustainability is the key strength of the company. Its promoters and executive chairman, Mr. Edward Menezes, says that sustainability is a core principle of our business framework. We pursue this initiative by way of our business processes, manufacturing capabilities, and product development. Rossari is one of the front runner and specialists in India for producing environmentally benign substitutes that replace legacy and harmful products, thereby minimizing carbon footprint. Its next strength is diversified product portfolio. Another key strength of Rossari Biotech is a very well diversified product portfolio. They provide sustainable chemical solutions for customers across FMCG, home care, industrial cleaning, personal care, textile specialty chemical, performance chemical, animal health and nutrition, and pet care businesses. This diversification also reduces the business risk and multiplies the business opportunity. Its third strength is strong R&D capability. R&D is the heart of Rossari business and one of the key strengths of the company. Its R&D team has created eco-friendly and cost-efficient sustainable solutions that has provided competitive advantage to Rossari Biotech. Then its next strength is wide sales and distribution network. Company has an extensive distribution network and it is also the largest textile specialty chemical manufacturer in India. If you look at the competitors, there are not many listed competitors for Rossari Biotech. For example, in textile chemical, it has competition from Aarti Industry and Bodal Chemical. Then, within personal and home care, it has competition from Galaxy Surfactant and Aarti Surfactant. Hence, competition risk would always exist. Then, there is demand risk. Chemical sector has dependency on the end industry. If there is a slowdown in the end industry, then it would result in slowdown in demand. Although, the company has a very diversified revenue base that mitigate this risk. Another risk is raw material risk. This is again a major concern in the chemical sector. If the raw material prices increase, then it can impact the profitability of the company. Although Rossari Biotech has a very low dependency on imports and majority of its raw materials are sourced from India. Overall, on key strength, competitors and key risk, I would rate it 8 on 10. If you look at the future growth prospect, the specialty chemical industry in India has been on a robust growth trajectory over the last few years and is one of the best performing sectors within the Indian manufacturing space. The industry finds product application across a wide range of end user industries such as your agriculture, food and beverage, health, personal care, automotive, electronics, water, and so on. In recent years, there has been a strong expansion and growth of these end user industries, thereby fueling the growth in application of specialty chemical products. For example, in home and personal care segment, there is a rising awareness of health and hygiene. Then, strong demand from rural sector. Then, consumers aspire to look good and use beauty and grooming products, and there is an increased focus on the premiumization along with eco-friendly and natural products. All these factors would drive the home and personal care segment. Likewise, the textile segment in India is growing at a good rate as the government has a strong focus on reviving the textile industry. There is an increased demand for home furnishing, floor covering, and technical textile with antimicrobial property, wrinkle-free properties, and stain-resistant properties, etc. Then there is a rising demand for animal health and nutritional segment due to increased awareness about pet care and pet health, then growing nuclear families, adopting more pets, and growing popularity of premium animal nutrition. Global specialty industry is expected to grow at 6.4% CAGR to reach $1.2 trillion by 2025. However, the Indian specialty chemical sector is growing rapidly. It has grown from $18 billion in 2014 to $32 billion by 2019 at a CAGR of 11.7%. And it is expected to grow at a CAGR of 12.4% to reach $64 billion by 2025. Rossari Biotech is growing both organically as well as inorganically. Recently, Rossari Biotech has acquired two companies. In June 2021, Rossari acquired Unitop Chemical for 421 crore rupees. 65% share would be acquired immediately and the balance 35% over the next 2 years. Unitop Chemical is a leading supplier of surfactant, emulsifiers and specialty chemical with customers across the globe. It has acquired 100% stake in then Tristar Intermediates for a total amount of Rs 120 crore. Tristar Intermediate is in the business of preservative, aroma chemicals and home and personal care additive with high-tech distillery facilities. Both the acquisition would help Rossari Biotech grow quickly. As far as capacity expansion is concerned, Rossari Biotech Dahej facility has recently been fully operationalized with a total installed capacity of 1.32 lakh metric ton per annum, making the total capacity to 2.52 lakh metric ton per annum. Company is also planning to launch new products and that would result in ramping up the utilization level in the Dahej facility over the next 3-4 years. Overall, on future growth, I would rate it 10 on 10. If you look at the growth ratio of Rossari Biotech, its revenues have consistently grown from 178 crore in March 16 to currently at 785 crore at a brilliant CAGR of 32.66%. Its profits have consistently grown from 3 crore to currently at 84 crore at an exceptional CAGR of 88.65%. Both revenue and profit growth has been fantastic. Hence on growth ratio, I would rate it 10 on 10. If you look at the profitability, it has an operating margin in the range of 15 to 20% and latest operating margin is 16%. If you look at the ROE and ROCE, both ROE and ROCE are consistently above 20%. The latest ROE is 20.8% and ROCE is 28.2%, which is very good. Hence on profitability, I would rate it 10 on 10. If you look at the debt to equity, it has consistently reduced and currently it is 0. It means company is completely debt free. Hence on debt to equity, I would rate it again 10 on 10. If you look at the cash position of the company, it has cash and cash equivalent of 86 crore. If you look at the latest shareholding pattern, promoters hold 68.7% stake in the company. FII hold 7.82% stake and DII hold 13.6% stake. Both DII and FII have increased their shareholding as compared to last quarter. Rossari Biotech has a market cap of 8,000 crore rupees. So it is a small cap company. It is currently trading in the range of 1500 rupees. At current levels, it is trading at a P ratio of 98. Now if you simply look at the P ratio, then it is certainly very overvalued. And I don't see a very high upside potential in this stock in near term. However, if you look at the earning growth, this company is growing at a phenomenal rate. And the fact that there is immense growth opportunity in specialty chemical space for a small cap company like Rossari Biotech, this company is in high demand and hence trading at richer valuation. Now at current levels, the better investment strategy would be to make an entry and buy periodically as well as on dips. It would be interesting to see the Q2 result that would also drive the share price movement in this stock. But certainly, this is a good stock for long-term investment. So in this video, we discussed the fundamentals of Rossari Biotech. It is a small cap specialty chemical company with business across textile, home, personal care and performance chemical and animal health and nutrition with a total of 3000 plus products and 1000 plus customers across the world. It has an experienced management with strong focus on sustainable development in chemical sector. The future growth prospects of the company are very bright as specialty chemical sector is expected to grow at a very good rate due to factors like China Plus One and government focus on Atmanirbhar Bharat. Company is growing rapidly both organically with addition of new manufacturing plant and inorganically with acquisition. Also, company has got very solid financials. The only problem is that the stock is trading at higher valuation and that is obvious due to the current euphoria in the stock market and bright growth prospect for this company. Overall, it is a fundamentally strong company and worth investing systematically for long-term wealth creation. So have you invested in Rossari Biotech? What is your take on this company? Let me know in the comments. I hope you'll find this video useful. I'll see you in another video. Till then, take care.